Every single year, millions of people sign a document they barely read, handing it to a stranger they barely know, and hoping for the best, and that stranger is their accountant. We are talking about your tax return, a legally binding document that you are personally responsible for, even if someone else prepared it. The IRS does not care that you trusted your preparer, because the moment you sign that return, you own every single number on it. Think of it like co-signing a loan for someone you met at a networking event. Charming, confident, but you are the one on the hook if things go sideways. So here is the question every taxpayer should be asking before they sign anything. Do I actually understand what I just agreed to? It sounds almost embarrassingly simple, but the data is alarming. A 2023 Treasury Inspector General report found that tens of millions of dollars in improper refunds trace back to returns prepared by unregulated tax professionals. And here is the kicker. Anyone in this country can legally call themselves a tax preparer with zero credentials, zero testing, and zero ongoing education requirements. We let more gatekeeping happen at the local barbershop than in the tax preparation industry. And that is not hyperbole. That is just a Tuesday. The question you should really be dissecting before you sign is this: has every deduction, credit, and income source on this return been verified and documented? That one question is a scalpel because it forces your preparer to show their work instead of just handing you a number that feels good. Think of your tax return as a story. Every line is a sentence. And if any sentence is a lie, even an accidental one, the IRS will ask you to rewrite the whole chapter, usually with interest and penalties attached. The behavioral pattern here is that most people feel so much relief when the refund number appears that critical thinking goes right out the window. Historically, audit rates have been low enough that complacency set in for decades. And preparers with bad habits got away with sloppy work because the odds of being caught felt distant. But the Inflation Reduction Act pumped nearly $80 billion into IRS enforcement, which means the era of flying under the radar is closing fast. There is a persistent myth that if your preparer made the mistake, you are automatically protected, and we need to bury that right now because it is simply not how tax law works. The IRS has a legal concept called reasonable basis. And if you cannot explain why a deduction was taken, the burden falls on you, not the person who typed the number. Practically speaking, the single most powerful thing you can do before signing is request a line-by-line summary meeting with your preparer. Not an email, not a PDF, a real conversation. Ask them to point to the document that supports every major figure. And if they get defensive or vague, that is your answer. One of the most under-discussed lessons from tax history is that extensions are not extensions of your liability window. They only extend the filing deadline, not the payment deadline. And every year, people get blindsided by underpayment penalties they thought they had avoided. Signing an extension without asking, do I owe estimated taxes right now, is like pausing a leak instead of fixing the pipe. The discipline here is not about paranoia, it is about process. And process is what separates people who build wealth from people who lose it to preventable mistakes. Your tax return is not a transaction. It is a financial fingerprint that follows you into mortgage applications, business deals, and retirement planning. We're not suggesting you become a tax expert overnight, because that is not realistic or necessary, but you should be able to look at your return and identify your gross income, your adjusted gross income, and your effective tax rate without breaking a sweat. If those three numbers surprise you when your preparer explains them, that is a yellow flag worth slowing down for. At the end of the day, the most expensive signature you will ever write is the one you make without asking questions. And the cheapest insurance you can buy is 30 minutes of deliberate review. Discipline, sizing your risk, and consistency, and asking the right questions every single year. That is the strategy that compounds over a lifetime. Whether you owe or you receive, whether the market is up or the economy is rattling, a well-documented return is your cleanest defense and your clearest financial foundation. We are comfortable with any outcome when we have done the work honestly and prepared rationally. And if you are looking to take the next step beyond tax season and start putting your financial foundation to work, whether that is real estate investing, home contracting projects, or connecting with the right lenders, check out our links in the description below.